Okay, so here we have a short video, a simple comparison between lending companies and financing companies. Okay, so first let's define lending companies: a corporation engaged in granting loans from its own capital funds or from funds sourced from not more than 19 persons. So it shall not be deemed to include banking institutions, investment houses, savings and loan associations, financing companies, pawn shops, insurance companies, cooperatives, and other credit institutions already regulated by law. The term shall be synonymous with lending investor. So they could be individual, they could be corporations, but essentially they should be registered as corporations, right? It shall only be established as a stock corporation with the words lending company, lending investor, or any other word descriptive of its primary activity of granting loans to the public, except words commonly used to identify financing companies included in its corporate and trade name. So if you're a lending company, you should have the words lending company or lending investor in the name of the business. Okay, so I think any individual who'd like to go into the business of lending, so they need to register as a corporation. So in that sense, I'm not sure if financial institutions are allowed to register as sole corporations, but I will check later. Okay, so essentially their difference is that lending companies, they have their own funds. The capital funds came from the person or the founder or the business owner, right? Or it could be sourced from other people, but not more than 19 persons. So if that person knows, have friends or colleagues who have the money, so it should not be sourced from more than 19 persons. Okay, so for financing companies, so essentially they're a stock corporation, so they can source money from people who have investments, okay, who have the money to invest. Okay, and then no lending company shall conduct business unless granted an authority to operate by the SEC. Okay, they should be registered, they should be a legitimate business. Powers: a lending company may grant loans in such amounts and reasonable interest rates and charges as may be agreed upon between the lending company and the debtor, provided that the agreement shall be in compliance with the provisions of RA number 3765, Truth in Lending Act, and RA number 7394, Consumer Act of the Philippines. Essentially, they must inform the consumer of, how much really is the fees, the processing fees, or other, there should not be any hidden charges. All charges should be made known to the consumer. Provided further that the Monetary Board, in consultation with the SEC and the industry, may prescribe such interest rate as may be warranted by prevailing economic and social conditions. Okay. And then for the financing companies, they are defined as corporations primarily organized for the purpose of extending credit facilities to consumers and to industrial, commercial, or agricultural enterprises. And then of course they could also get involved in underwriting of securities. So these are the activities that they have: direct lending or discounting or factoring of commercial papers or accounts receivable, buying and selling contracts, leases, chattel mortgages, or other evidences of indebtedness, financial leasing of movables as well as immovable property. It does not include, again, banks, investment houses, savings and loan associations, insurance companies, cooperatives, and other financial institutions organized or operating under other special laws. Okay, so they have their own special laws, okay, applicable to each. Okay, it shall be organized in the form of a stock corporation subject to the following requirements: 40% at least shall be owned by citizens of the Philippines, minimum paid-up capital as required by SEC issuances regarding financing companies, and then corporate name must contain the term financing company, finance company, finance and investment company, or any title or words descriptive of its operations and activities as a financing company, right? And then for the rights and powers, they can also engage in trust operations subject to the provisions of the General Banking Act upon prior approval by the BSP. Okay, essentially, they can't, but they can Inherently they can't, but they can ask the BSP for approval. Okay. Issue bonds and other capital instruments subject to pertinent laws, rules, and regulations, so underwriting of securities. Rediscount their paper with government financial institutions subject to relevant laws, rules, and regulations. Participate in special loan or credit programs sponsored by or made available through government financial institutions. And provide foreign currency loans and leases to enterprises that earn foreign currency by exports or other means subject to existing laws, rules, and regulations promulgated by the BSP. And then, I think this was the first one, right? This is A before B. Engage in quasi-banking and money market operations with the prior approval of the BSP. Such rights and powers may be included in the financing company's articles of incorporation after submission of the appropriate license or authority issued by the government agency involved. So mainly SEC, Monetary Board from the BSP. Okay, so that's it for this one. Just a short differentiation between lending companies and financing companies. So essentially, lending companies are restricted to simply lending, okay, to their consumers. For underwriting, they cannot do that. Discounting, no. Okay, so again, they're focused on simply lending and earning from the interest that they charge to their customers. All right, so that's it for this one. Thanks and bye.